Hey everyone, this is Jacob from Insurance by Brewer. We educate families every day on life insurance. Now, there are three types of life insurance you need to know about. In this video, I'm going to break down the key differences and similarities between these three types of life insurance to help you make a better informed decision for your needs and your goals. Now, there are four key points we need to cover before we dive into this. One, what is life insurance? What is underwriting? What are the uses of life insurance? And what are riders? Now, one, what is life insurance? Life insurance is simply a contract between you and an insurance company that says when you pass away, they're going to pay a specific amount of money to whoever you choose, or what is called a beneficiary. Now, what is underwriting? Underwriting is a process of due diligence by insurance companies for every individual that applies for life insurance. It helps them determine whether somebody is able to be insured, at what amount, and at what cost to the applicant. It's designed to provide the fairest price for every person. Now, different companies and policy types have different underwriting requirements. For example, smaller whole life policies typically only ask some yes or no medical questions, while big term policies typically require what's called a paramed or a paramedical exam, which consists of having a physical and taking a blood or a urine test. Now, there are also companies and policies that don't ask any medical questions, so that folks that are even unhealthy or facing ailments can still obtain a policy. Now, it's important to know this: the more underwriting equals the less premium. So what are the uses of life insurance? Life insurance can serve a variety of different purposes and goals. This can include covering end-of-life expenses such as funeral costs, replacing lost income for the policyholder's family or dependents, paying off mortgages or other debts, providing a source of savings or investment income, or offering tax benefits for the policyholder or beneficiaries, providing long-term care coverage for the policyholder, or funding a child's education or other major expenses. Whichever your goals and your needs are, you need to understand that no life insurance policy is a one-size-fits-all. Different policies and riders all serve different goals and needs. This is why it's so important to talk with a knowledgeable professional before you get a policy. Now, if you need help, you can schedule a phone call with me personally, either under this video or at insurancebybrew.com. Now, moving on, what are riders? Life insurance riders are additional features or options that can be added to a policy, either for free or for an additional cost. They provide additional coverage or benefits beyond what the basic policy provides. Now, some examples of common riders include an accidental death benefit rider, and this rider usually doubles or triples the payout of the policy if the insured person passed away from accidental causes. Another example of a rider is an accelerated death benefit rider, which allows the policyholder to access a portion of their death benefit while still alive if they are diagnosed with a terminal or a chronic illness. Another example is a waiver of premium rider, and this one allows the policyholder to stop paying the premiums if they are unable to work or become disabled. Now, it's important to know that the riders vary depending on the insurance company and the policy, so it's extremely important to read the policy and understand the terms and conditions of each rider before just purchasing them. So now that you know a little bit more about the inner workings of life insurance, let's get into the different types of life insurance policies available and what they're used for. Let's start with whole life insurance. Now, whole life insurance is the type of permanent life insurance that provides coverage for your entire life as long as you continue to pay the premiums. It also has a savings component known as cash value that grows over time. Now, this means that you can access the cash value of the policy if you need it by taking a loan out against the cash value or withdrawing the cash value outright. It's important to know that premiums for whole life insurance policies are generally higher than other types of insurances because a whole life policy is going to pay out no matter what once you get the policy. Now, the younger you are when you get the policy in place, that typically means a lower premium. You can get these policies at any age. However, in my experience, this is generally most useful for folks 50 and over to plan for their final expenses or to leave a small legacy behind. Now, let's move on to term life insurance. Term life insurance is a temporary life insurance that provides coverage for a specific period of time or a term, such as 10, 20, or 30 years. The premiums of term life are generally lower because the coverage ends once the term is up. This means that if you outlive your term, you no longer have coverage. Now, term life also does not have cash value, so any premiums go directly toward the cost of insurance. Now, term is great for folks still working or raising a family or having dependents, as term can provide a much larger payout for a lower premium. It's typically recommended to have at least 10 times your yearly income as a term policy to replace lost income. To give you an example, a 30-year-old male can get a $500,000 policy that lasts 30 years for around $55 a month. Now, underwriting requirements for term policies have a wide range. I deal with companies that will give a $100,000 term policy, and all you have to do is answer those basic medical questions just like with a whole life. But remember, what I said earlier, the more underwriting equals the less premiums. That same company offers a different $100,000 term that requires a paramed that I mentioned earlier, and it's less monthly premium. Why? More underwriting. So finally, let's talk about universal life insurance. Universal life insurance is kind of like whole life, as in it provides coverage for your entire life and builds a cash value. Now, there are 3 different types of universal life insurances. There's just plain old universal, variable universal life insurance, and index universal life insurance. Now, they all provide the same benefits with slight differences between them, such as how they're taxed and how the cash value grows. Nonetheless, the premise stays the same. The cash value can grow alongside the market, which means that as the market goes up, your cash value and your death benefit can also go up. Your policy amount and premium can be adjusted over time to accommodate for changes in budgets or financial goals. Another benefit is the cash value can be used as an income stream to draw off of each month or taking it as a lump sum when needed with no penalties whatsoever. In all, life insurance policies provide a wide range of benefits and advantages, and they all serve different purposes. Knowing which policy to get that aligns best with your financial goals is the key to getting the right policy. Hey, I hope this video helps simplify the main types of life insurance that is available. I help people every single day get the right policy. If you need help finding a policy, schedule a call with me below and I will personally help you out. Thank you for your time.